Good day, everyone. This is Patrick from EasyFX Code Trading System, and it's Saturday, the 25th of February, 2023, and it's the weekly technical analysis for spot gold and dollar yen for the first week of March, 2023. And if you look at the inverse correlation, the spot gold has been drifting lower for the week, especially the last 4 days. And dollar yen has been attempting to break out for the week, and it finally did on the Friday after already breaking out the previous week from the daily 55 EMA. So looks like the dollar is attempting to climb up higher, and all due to a couple of news triggers this week, starting with the flash PMIs on Tuesday, which came out better than expected, especially for the services PMI. And then the UsdJpy figure was also, or at least the price index for the GDP was higher than expected, and culminated on Friday with the PCE price index, the inflation figures that the Fed uses to track, and it came out higher than expected, thus elevating fears again of further rate hikes and further extension of rate hikes. And it could be another 3 more rate hikes instead of just maybe another 2 and a pause. So Friday was the final trigger and gave the boost to the US dollar, which you will see on the DXY. So let's kick off with the spot gold. And after attempting to dip lower the previous week, pull up to retest, and they did retest this break of the trend line, and then rejected on the Wednesday after attempting to retest the 1850 level again, but could not reach it and was blocked by the daily 55 EMA, and then continued to drift lower and attempting to hit the daily 200 EMA at the just below the 1803. So it's moving into the support zone of the 1800 round figure, where the daily 200 is sitting just above that, and trying to target the 50 Fib retracement from this last swing move up, and that's at 1788. So we'll see if next week is going to continue to drift lower. And the US side is basically just the ISM figures, manufacturing and services especially, on the Friday. So this time we'll see if it's able to find support from the critical round figure at 1800, or it's going to dip to test the 50 Fib before settling in neutral at 1800. So far it has been retracing since hitting the 1950 area. It did spike through to 1960, and then since then, since the start of February, it has been drifting all the way back down. So we take a look at the weekly time frame, and you can see a very weak bearish candle, and falling into the weekly 55 EMA, which will correspond with the daily 200 EMA. And for the month, since it's coming to the end of the month, it's an engulfing candle for the month. If it closes this way and we have a couple more days next week. So it could continue to drive into lower territories in March. So we'll see whether there's further triggers. This coming week, there's no NFP yet, so it'll be the following week, even though it's the first Friday, but it's likely because of a short month, so it's the following Friday. All right. So we'll see if any of these news events will help to prevent dollar from rising further and help the major currencies and spot gold to find some support, interim support. But so far the flash PMIs already shows higher than expected figures. Okay, so we'll compare this with the US dollar index to see whether that has already broken through any key resistance levels. And this is the US dollar index, the DXY, where you can see that the inverse relation did take place with the bullish move on the US dollar, and especially on the Friday where the PCE price index figure came out higher than expected, causing concern on further rate hikes. And breaking through the daily 200 EMA here, as well as the 78.6 Fib retracement of this recent swing move down. So that has broken through higher and almost reaching the resistance zone at the 105, just 10 points below that. So we can move this into interim support here now, just above the 62 Fib retracement, and the daily 55 EMA is coming up too. So let's move this one out, and we'll move this into the 103. Let's expand this a bit more. So 103 now, and the 50 Fib will be the major support zone. Now it does break through the 105 and the recent swing high at 105.36. Then it's likely to continue grind its way back up to the 138 Fib extension at 107.20 area, which is close to this swing high area, previous swing high. But it does need to break above this recent swing high to the next swing high before targeting this area at 107. So still some way to go, and it could if it's still a bullish trend, and it could take a couple more weeks to attempt to reach the 138 Fib extension. And if we start from this swing high here, it has just reached the 62 Fib retracement. So this is also a valid move, and then I was going to try to get up to the 106 and eventually to the 107 plus area. For now, we'll leave it as such at this recent swing high, trying to retest it at 105.36. Okay, we'll see whether these two news events is sufficient. We'll need to wait for the following week with the non-farm payroll report as well. All right, but for now, there's definitely a bullish recovery for the US dollar. Okay, so let's move back to the other major pairs. Let's continue with the dollar against Japanese yen, where on Friday there was the further breakout after the initial breakout from the daily 200 EMA, and finding support from the 62-Fib retracement and extending past the 786, and attempting to target the next resistance zone that's around the 138 round figure. And this swing high, trying to retest this swing high just above the 138. So this is now got to move all this back up here now to the swing high and this zone that we've highlighted a few weeks back. And this is the interim support. We can move this into the 62-Fib retracement area. And the next critical support will be at the 50-Fib retracement. All right. And if we take a look at the weekly time frame, we can see that's the continuation move after the bullish close the previous week. And it's gradually moving up into the resistance targets. Right, and we'll see whether this trend will continue. Bullish continuation move. Let's check if it does continue to move up higher. Yes, we won't adjust this yet, but we'll see how far it goes to retest the recent swing high here. That's at the end of December, or the middle of December. Okay. So for now, dollar is on its way to continue its recovery. And dollar yen has been gradually grinding its way further up, and finally has broken through the 135 round figure. Okay, so we'll see where it's going to end up next week in comparison with the US dollar index as well. All right, so do have a safe week and a good trading week, and do check out my other videos on other major pairs, and cheers for now.